Let me ask you something. Do you think Toronto real estate has finally hit the bottom or not? Of course, it's a $1 million question. Buyers are wondering if now's the time to jump in, and the sellers are wondering if the worst is behind us. And let's be honest, everyone is tired of waiting around. Well, August gave us another piece of the puzzle. Sales were up, listings were up, but the prices, they were still slipping. So what's really going on here? And more importantly, what does it mean for you? Whether you're buying, selling, or just watching from the sidelines. Stick with me, and I'm going to unplug this in plain English. By the end of today's episode, you will have a clear picture of whether we are bouncing off the bottom or just skimming along it. Here's the headline. In August, we saw just over 5,200 home sales across the GTA. That's 2.3% higher than last year. Now think about that for a second. A year ago, buyers were frozen, rates were sky high, headlines were doom and gloom, and a lot of people just said, forget it, I'll wait. Now fast forward to August 2025. More people are buying. That tells me the confidence is creeping back in. And here's the twist. The average selling price was down about 5.2% year over year. We're sitting at around $1,020,000 on average. So we've got more sales, but at lower prices. So what does that tell us? It tells us buyers are active, but they are being smart. They are not chasing luxury detached homes or detached homes at $1.6, $1.7 million. They're scooping up the more affordable, basically, stuff. Like condos, townhomes, and detached homes that are price sharp. It's like the market is moving, but it's moving where the deals are. I'll give you an example. I was talking to a first-time buyer recently, young couple, both working decent jobs downtown. Last year, they were completely priced out. Every time they look at the listings, the numbers just didn't make sense. But this summer, they decided to pull the trigger on a condo in the $700,000 range. Why? Because for the first time in years, they felt they could actually afford the monthly payments. Rates came down just enough, prices dipped just enough, and boom, you see, they said, let's do it. And they're not alone. That's exactly the kind of buyer that's driving the August number. Now let's talk supply. In August, new listings were almost up 10% compared to last year. That's a lot of more choices for buyers. Picture walking into a store where the shelves used to be half empty and now they're full. So you're not going to grab the first thing you see. You're going to shop around, compare, and maybe even wait for the discount. That's what's happening in real estate right now. Buyers know that they have options. They're negotiating, and the sellers who want to move their property fast are realizing they've got to be realistic. So yes, more sales are happening, but it's still very much a buyer's market when it comes to prices. And this isn't just August numbers. Back in July, I don't know if you saw my video about hitting the bottom. Back in July, we saw the same pattern. Sales basically we're up 10.9%, let's say 11%, rounding it up. It was the strongest July since 2021, but the prices were still down 5.5%. So 2 months in a row, we are seeing this exact combo: sales rising, prices slipping. And if you go back to June, same story. This isn't a one-off thing. It's a trend. So let's circle back. Does this mean the bottom is in or not? Well, let's look at it from both sides. On one hand, basically sales momentum is clearly back month after month. More people are buying compared to last year, and that's huge. Historically, sales recovery basically usually leads to price recovery. But, and this is a big but, of course, supply is still high. Listings are climbing and buyers are peaking. Prices are on a year-over-year basis, and they're still heading down. It looks like they're still heading down. That tells me we are hovering at the floor. We are probably not going to see the prices crash much lower, but we are also not bouncing back just yet. Let me give you another example. I spoke to a seller in Mississauga last week. They bought their home in 2016. They've got a lot of equity. When I showed them the comps, they were not that happy because prices were a bit lower than what they expected. But you know what they said? Even if I sell for less than I thought, I'm still way up from when I bought this house. And the house I'm moving to is also cheaper now. So for basically people who are transitioning in this market. Let's say, for example, they sell a house and they downsize, or let's say upsizers. So as long as you're transitioning within the same market, you don't feel that much difference. That's basically the perspective that sellers need right now. Yes, you might get less than the 2022 peak prices, but on the flip side, you're also buying in a softer, cheaper market. It balances itself out. So now let's talk about the economy. According to the TRREB, Toronto Real Estate Board, more rate cuts are possible. And let's be real, the second basically rates move lower, more buyers are going to flood back into this market. So imagine this. What happens when the demand keeps picking up and supply eventually gets absorbed? Prices flatten and then they start to climb. We're not there yet, but we can see the outlines of it forming. Now let's talk about the human side of it. So the other big story here is affordability. A household earning the average income in the GTA is still struggling with monthly payments, even in today's prices. TRREB highlighted this in the recent report. But with rates easing and sellers negotiating, that dream of homeownership is starting to feel real again for some other families. And that's basically what August showed us. People are no longer paralyzed. They're making moves. Not everyone, of course, not at every price point, but enough to shift the numbers. And now let's see where's the action happening. Condos and townhomes are basically leading the way, especially in the cheaper brackets. Detached homes are still moving, but they're not the star of the show. Buyers are hunting in that $600,000 to $900,000 range because that's where they can basically stretch their budget without basically breaking it. So if you're in that segment, if you're a seller with a well-priced condo or a townhome, you're going to see activity. If you're in the $1.5 to $2 million detached space, it's going to be slower, much slower for you. So let's look ahead. What does this all mean heading into the fall market? I think we are in a transitional moment. The panic is gone. Prices aren't falling off a cliff anymore, but they are basically also not rebounding. If you're a buyer, this is your window, more inventory, softer prices, and still some negotiation room. If you're a seller, you got to be strategic. You can't just list high and hope. You need to price right, present well, and understand that buyers are comparing you to a lot of other options. So is the bottom in or not? Here's my take. We are standing on it. Basically, sales are up, demand is coming back, and prices have flattened month over month. But until rates drop, basically more, or let's say supply tightens, we are going to hover basically around here. For buyers, that's good news. You've got a rare chance to buy without insane competition. For sellers, it means that you got to be sharp, but the buyers are out there. And at the end of the day, the real estate isn't about perfectly timing the market. It's about making the right move for your life. And right now, there are opportunities on both sides if you know how to play it. That's it for this month's market update. If you found this breakdown helpful, hit basically subscribe button, share it with a friend, and stay tuned because the fall market is shaping up to be one of the most interesting we have seen in years. See you next time.